That's a joke. Thank you for catching it. Yeah, the 39th peace deal. Good morning, Lee. Rates improved last week and continued today as the 39th announcement of a peace deal with Iran appears to be legitimate. That's a joke. Thank you for catching it. Yeah, the 39th peace deal. Hopefully it's legitimate. Maybe. Let's say I am optimistic this time. Friday is the signing day. If that does happen, expect rates to continue to drop. Make it a great week. So rates did improve slightly. So the FHA 30-year fixed sitting at 6.448 and the VA 30 sitting at 5.89. So last week we had nothing even close to being below 6. Today we have VA sitting below 6. So with the Iran war hopefully ending, if that does actually get signed on Friday, we should see some relief in the markets. We'll feel it first at the gas pump. When the gas pump starts coming down, consumer confidence will start going up, and consumer confidence just gets better and they start buying again. So that happened. The other thing that's driving the market is the most recent SpaceX IPO. The biggest financial headline this week remains the historic SpaceX IPO. Elon Musk became the first person in history to surpass $1 trillion net worth as SpaceX valuation crossed the $2 trillion mark. $1 trillion net worth. I was talking with the guy this morning. He says, I can't even fathom $1 trillion. He says, what do you even do with that? I said, buy bigger boats. I don't know. $1 trillion. He said, I can't even fathom $1 billion. I said, well, if $1 billion is 1,000 million, what is $1 trillion? $1 million? $1 trillion. Wow. Think about that for a moment. $1 trillion fortune wasn't built through real estate. It wasn't built through retail. As I look at the economy, I'm kind of jumping around here. As I look at the economy, the lending markets, real estate, and where our company is headed, I believe we're standing on one of the greatest opportunities we've seen in years, but only if we recognize how the market has changed. The economy is not collapsing, the economy is transforming. The last decade rewarded people who simply owned assets. Rising markets covered a lot of mistakes, but today's economy is a bit different. Consumers are asking, number one, how do I create income? Number two, how do I survive inflation? 3, how do I replace lost wages? 4, how do I access capital? And 5, how do I grow a business when banks are tightening? This is what our clients are asking. The market is rewarding operators, not speculators. This is actually good news for educated investors like Mr. Robert Wells, right? Okay. So, and I loved Robert's response. I've been in financial services for 35 years, but I still felt investing and training and education was the right direction for me. We need to help all of our clients understand that. So again, to Jacqueline's point, guys, make sure we're transferring anybody you're talking to over to our BDCs and getting them involved in our programs. We are seeing growing demand for the DSCR loans, bridge loans, equipment financing, SBA financing, working capital, lines of credit, revenue-based financing, and commercial lending. Businesses are still in need of capital. Investors still need capital. Entrepreneurs still need capital. The difference is that they're finding it outside of traditional banks. And then lastly, I want to mention this. The new economy creates a new opportunity. 20 years ago, people wanted jobs. 10 years ago, people wanted real estate. Today, people want income. Isn't that interesting? 20 years ago, they wanted a job. 10 years ago, they wanted real estate. Today, they just want income. And they don't even really care where it's coming from. We're learning this through Uber and Uber Eats and all these delivery services and ride-sharing programs. People are less concerned with what they're doing and more concerned, is it generating income for me and for my family?
Want to learn more? Just click the link below.